Country Garden, China's largest private property developer by sales, has revealed a record RMB 48.9 billion ($6.7 billion) loss for the first half of the year as it battles to survive the liquidity crisis afflicting the country's real estate sector. The 6-month results released on Wednesday represent the highest ever losses for the group, until recently considered safer than many of its peers. They also highlight the dire outlook for an industry typically responsible for more than a quarter of economic activity in China. The company's revenues in the first half of this year increased 39% to RMB 226 billion. But it added that it had struck a balance between sales volume and selling price at some of its property projects to ensure punctual delivery of finished properties, an apparent acknowledgement that it had cut prices to shift units. Concerns over Country Garden's finances grew this month when it missed coupon payment. Authorities, the southern cities of Guangzhou and Shenzhen relaxed mortgage lending conditions for first-home buyers on Wednesday. Caps on bank mortgage lending were originally part of a wider approach designed to address overheating home prices. A prolonged slowdown has since hit housing prices amid collapsing sales and delays to construction of new apartments. The government has stopped short of any bailouts, but its approach towards Country Garden is being closely watched. Chinese developers face a $38 billion wall of renminbi and dollar bond payments due over the next 4 months, according to data from Dealogic. Developer defaults will certainly continue as almost all private developers face cash flow pressure that isn't going away anytime soon, said Bruce Peng, chief economist for Greater China at JLL. Any policy support that does come will take time to feed through to cash flow, home sales, and new construction starts. Country Garden had planned to raise $300 million from a share offer in late July, but abruptly canceled the deal at the last minute. The developer also announced plans on Wednesday to issue 270 million Hong Kong dollars, $34 million, of new shares in Hong Kong at a 15% discount to its closing price on Tuesday, with all money raised to be earmarked for repayment of existing loans. Shares in Country Garden rose 5.7% on Thursday morning in Hong Kong following the company's first half results. The stock is down 2/3 in the year to date, reflecting a loss of more than $7 billion in market capitalization.